Okay, so you just opened your mail, and there it is, an official, very intimidating letter from the IRS. It's a CP504 notice, a notice of intent to levy. If your heart just dropped into your stomach, you are not alone. In this explainer, we're going to break down exactly what this notice means, and, more importantly, the one thing you absolutely must do about it, right now.
And yeah, that feeling in the pit of your stomach, it's completely justified. This notice is designed to get your attention because the stakes are incredibly high. That 30-day deadline isn't a suggestion. It's a very real countdown to some serious financial consequences.
So let's move past the initial shock for a second. What is this piece of paper really telling you? Well, it's the IRS basically saying, hey, our patience is running out. But it's also your last official warning before they can take serious action. So let's decode it together.
I want you to think of the CP504 not as the final blow, but as the final, very loud warning shot. See, the IRS has probably already sent you other letters, like the CP501 and the CP503. Now, they're taking it to the next level. This is the moment you have to pay attention. Here's the deal. This notice is a legal requirement. The IRS actually has to send this to you before they can start taking your property. They're telling you straight up that they're coming for your state tax refund first, and they're putting you on notice that your wages and the money sitting in your bank accounts are next on their list. So now everything, and I mean everything, hinges on this 30-day clock. Ignoring it is, without a doubt, the biggest mistake you can possibly make. Because with every day that ticks by, your options and your leverage start to disappear.
Let's break down this window of opportunity. The first few days, you're in the green zone. This is when you've got a little time to breathe and understand what's happening. But pretty soon you enter the yellow zone, and this is your critical window to act. Because once you hit day 31, you're in the red zone. And that means the IRS can start seizing your assets without any more warnings.
And what does the red zone look like in real life? Well, let me tell you about a small business owner named Michael Chen. He got a CP504 and quickly realized that on day 31, the IRS could legally seize his business bank account, wiping out all the money he needed for payroll. This isn't some abstract problem. This is a real-world cash flow crisis that could have completely shut down his business.
Now, that threat is absolutely real, but you are not powerless here. The law actually gives you a powerful tool to stop this countdown in its tracks and fight back. It's your right to an appeal. This is so important. I want you to really hear this. Before the IRS can touch a single dime of your money, you have the legal right to hit a giant pause button on their entire collection process. This is the single most important thing for you to understand right now. Now, this pause button has an official name. It's called a collection due process hearing, or a CDP hearing. The moment you request one, you automatically stop the levy. And this isn't some scary courtroom showdown. It's a chance to talk to a neutral officer in the IRS Appeals Division, someone who has nothing to do with collections, and figure out a sensible solution. And here's the best part. It's not some complicated legal maneuver. It's a simple one-page form, Form 12153. You just fill it out, and you mail it in within that 30-day window. This is exactly what Michael Chen did. On day 12, he mailed this form, and that one single action immediately protected his business's payroll account from being seized. Okay, so you've hit the pause button. The levy is no longer an immediate threat. You can take a breath. So, what's next? Well, that CDP hearing opens up a bunch of different ways to resolve your tax debt for good. The two most common solutions are right here. First, there's an installment agreement. This just lets you pay off the debt over time. It's a fantastic option if you have consistent income, because it creates a payment plan you can actually manage. This is what Michael Chen worked out. He arranged to pay about $475 a month. The other path is an offer in compromise. This is where you try to settle the debt for less than you owe. It's a bit more complex, and it's really for people facing serious financial hardship, where the IRS agrees they probably can't ever collect the full amount anyway. That hearing is your chance to present your case and figure out what works for you. We've gone over a lot, I know, and it can feel overwhelming. So I want to boil it all down to one clear, immediate action. If you're feeling stressed, just focus on this one thing. One. That's it. That's all you need to remember. There is only one thing you absolutely must do right now to protect yourself and get back in control of this situation. The most important takeaway from this whole thing is this: find, fill out, and mail IRS Form 12153. Don't wait until day 29. Do it now. This is your leverage. It's your shield. This one action stops the levy, kicks off the appeals process, and gives you the breathing room you need to find a real, permanent solution. Look, getting this notice feels like a gut punch. I know.
But it's really a crossroads. The path you take in the next few weeks is going to have a huge impact on your financial future. You can let that clock run out, or you can take one simple, powerful step to protect what's yours and decide your own outcome. The choice is yours.